Hey guys, welcome to another video. So last time we were mapping out gold, we were left with this analysis on our chart. And as we can see that price has respected our setups. It reached the supply before it dropped. So right now price has given us the confirmation that it's looking towards going to a down direction. So on the weekly, we can see that price has respected that supply. Next, price gave us a bearish engulfing candlestick, meaning that can be our potential supply as well. So we're going to highlight this bearish engulfing candlestick, which also means it's an initial break sell. So right now price has been dropping and we will wait for a retest towards this supply before price can carry on going down. Now that we have found our supplies, we will look for our nearest demands. On the weekly chart, this is our nearest demand as we stated in the last video, and it's next to resistance. Now we expect price to drop till this demand before going up to test the nearest supply and carry on going down to the demand at the lowest low. Now we have cleaned up the charts and you can see our supply and demand areas and prices in between. So we will scale down and go to the daily chart. On the daily chart, we can see a bearish engulfing candlestick and a broken demand zone over here. This demand zone has been broken and price is going to retest fresh demand below. So I expect price to drop a bit, touch that demand and then go up to test the supply. Then it will carry on dropping and going towards the downside. If price respects demand, it has the potential to make a new high or respect this supply. Going to the H4, the first thing I see is the top supply or a bearish engulfing candlestick. This can be our ultimate sell area whereby price can go and fill out and take out those orders over there. Next, I see a failed demand whereby price broke past this demand zone, making it the nearest resistance turned into support, RBS. Next, I highlighted the candlestick that broke that demand and I put the Fibbo on the body of the candlestick, not the wick, the body of the candlestick that broke and the wick of our supply. So the 100 goes to the body and 00 goes to the wick of that body, and we can see how far price will go. So far we noticed that price has already broken this 161 level and is currently going to the 2618 level where we can look for potential buys. Once price reaches this area, we will look for any buy entries or for confirmation such as a rejection or a QM pattern. This 261 level is near a rally base rally, so it's valid. If price breaks that area, it has the potential to go to the 423 level, which is the lowest price can go before having a pullback. As we can see on the daily, the 261 level is close to the rally base rally or alongside the rally base rally, which is our demand zone. When we go to the H4, we can see a dominant break buy, whereby it took 3 or more candlesticks to engulf one red candlestick, which is right here. This is known as a dominant break buy. It is when it takes 3 or more bullish candlesticks to engulf the previous candlestick right there, making this a potential demand. Going to the H1, we can see a rally base rally, whereby this can also be a potential demand zone. If you want tighter entries, you can always scale down and you will always find a tight entry or a sharper entry. So going to the M30, we can see a smaller demand, making it a better entry if you want to full margin, so you will have less loss to hold. Going to the line chart, we can see that this is a significant support and resistance zone. So it's SNR plus S&D plus Fibbo in one area, making it a sweet spot to enter. So in the coming weeks, we'll wait for price to rise towards supply, then drop to create a new low. That's all for today. See you in the next video.